Hello and welcome to another episode of Fintech Focus TV with me, Toby. Today's guest, I'm delighted to say, is Hirander Misra of GMEX. Hirander, how are you?
Hi, very well, Toby. How are you?
Very good indeed, thanks. Very good indeed. Listen, we know you as one of the most serial entrepreneurs in the financial technology, financial market space over the last few years. An amazing track record that you carried behind you, and GMEX has been going from strength to strength. We're seeing it every time I look at LinkedIn at the moment. You've got another award or up with something else. Tell us a little bit about what you're doing and the business.
Sure. I mean, we're now 8 years old as of June next month, and I mean, originally we started out as a fintech technology company, really working with exchanges and market infrastructure providers, clearing houses and depositories. But actually, over the last few years, we've heavily moved into digital assets, but also making our own investments. So we've got a venture portfolio now of about 14 different investments in this space as well. And that's spawned our own investment fund, but also as well as working with third-party exchanges and market infrastructure, also some of our own exchange ventures. So we're venture building as well as venture investing, as well as using the technology as an enabler for that.
It's a bit of everything.
Well, I mean, it's all interrelated. I kind of say, Walkers do crisps and they're different shapes and sizes or flavors, but they do crisps, right? I mean, as you know, in a business, it's important to focus on the key areas and not get too distracted by left field. So I think, we've kind of spawned into that because, we found that customer supplier approach doesn't necessarily work. You want to partner with your clients, really see what their pain points are and align with them, whether it's then taking exposure to the ventures or in other means, just making it a partnership, rather than looking for that check every month.
I think it's been a really interesting sort of time at the moment for him, and I hear various different levels of appetites for risk in terms of investment at the moment. And there are companies there that see it as a wonderful time to be investing in the right sort of tech. There's companies there who are taking a much more cautious view, and I keep harping back to the sort of very early doom and gloom messaging from Sequoia, which may or may not have been a ploy to win them some extra bargaining power, etc. But tell us a little bit from what you're seeing and how that's impacting the market.
Yeah, it's an interesting time because if you look at really early seed stage investments, they'll struggle now, or those investments that are close to having a completed product or about to launch and are still pre-revenue. So we've had various things on our desk which we get regularly now every week. And there was one which not so long ago, if you look at December time, had a pre-money valuation of 15 million and they were raising 5. Now they'll give it away for 1.25 million because the investors have pulled the plug. That's a little bit of an extreme case because actually there's been a large number of Series A deals, Series B, Series C deals during the pandemic that have still been concluded. And actually we speak to investors all the time, and they're actually concluding those over the phone and on video calls, as opposed to now going in for the usual type of due diligence face to face. So some of the deals were in the offing before the pandemic, but there have certainly been deals closing after that. And we're actually seeing investors are more selective, but actually in some ways it's good because the sector was overheated in terms of valuations. But you're actually seeing massive opportunity out there and there is a large amount of capital out there looking for decent investments. So we're broadly positive, and I think that flight to quality is essential. But especially on the fintech side, with anything that reduces cost, increases opportunity in terms of revenue and general efficiencies, it's going to be a home run. And even the large banks and exchanges and others are really investing into that now.
Yeah, I think that's very interesting because the surface of it absolutely it should be a home run. And I think you've hit the nail on the head there with reducing cost has been for the last 2-3 years in particular the sort of real enabler for investment, alongside doing exactly as you say, which is solving real-time problems and giving people the ability to, particularly around user design and usability and such like, and allowing people to work better. And I think people who are really focusing that message are having to be absolutely on point for that at the moment. That sounds like exactly what you're seeing out there as well.
Yeah, absolutely. It's a big opportunity for those that have got the resolve to look at these areas, and also, as you know, with your business, you've had to kind of challenge that status quo that's been in place, albeit in a growth business over the last few years. So the ability to be agile and think laterally is really beneficial, because you've got some of the larger organizations, and I call them the oil tankers versus the speedboat with, and it's always a challenge as you grow to maintain that kind of agility. But we're able to pivot into other angles with the same sort of business, and we've seen that, and that spawned opportunity because we're able to see where the pain points are. So whether that's then on things like crypto payments and digital asset development, there's a whole raft of areas out there that are ripe for change. SME financing, for example, during the crisis, there's been a lot of talk about that in the UK, but also globally. Yeah. But actually there are peer-to-peer lending platforms out there where some proponents are citing doom and gloom for them, but they're unlocking this capital that would have obviously been assigned to earlier stage companies, and looking at how that's applied and apportioned into the market as well. So actually, those pivots are yielding good results actually.
Yeah, I think it's really. You mentioned a word there that I've heard used in positive and negative terms over the course of the last few years, which is that word pivot. Recently I was at, before all of this, I was at an event when events were still available, where pivot was used as a very sort of dirty word, and they're saying if you've had to pivot, you've had the wrong plan, full stop, or it's the first sign of failure, or what have you. However, my view on that is agility has always been a really key entrepreneurial trait, and pivoting isn't necessarily ripping up your business plan and going for something new and lurching from one nervous expedient to the next. It's been it's about making sure you're there and you're being agile to the opportunities ahead of you. I think that's something you've absolutely nailed. Give us your thoughts on the pivot positive negative debate and where you stand on it.
Yeah, well, actually, I remember when we sat on Queen Street having coffee. I think it was like a day after you launched or whatever, 10 years ago. A decade flies by, right? We've got more grey hairs now, but older, not necessarily wiser, right? As we always say. But you look at that and you think, in those 10 years, and for us during that period, we've had to tweak the business model, enhance it, go into areas we didn't necessarily envisage at the outset. But actually, it's led to building a good business in that period, right? Because if I'd have asked you back then when we had that coffee, you'll have a TV channel, speaking about fintech. There'll be the magazine, the awards, and everything else that goes with it. You were focused at that time very much building the business and getting the first clients on, right? And if you look now, in this space, thought leadership is very, very important, and actually human capital increasingly is essential. So even when we look at fintech, or we saw moving from the Chicago floor to electronic trading, it spawned a massive opportunity for those that were able to adapt to that. They were still trading, but they were trading in a different fashion, and they had to kind of move that knowledge that was in their head into computers and algos. So if we look at all of that, I think even in technology, iterative development, agile development, iterative development are core terms, rather than this kind of rigid waterfall approach. And the problem is, you might have a business plan, but we know, business plans are live things. We know that with all the ventures that we're into, and actually they're changing week on week, month on month. So if you're very rigid and you just stick to what and actually sometimes you can be over-dogged with that. The world around you isn't rational, and it's changing constantly. As we've seen, who envisaged that we'd be in this situation, locked down in our homes, chatting right now. So I think in that sense, for us, pivot is all about flexibility. And actually, I see it as a good word, not a dirty word. Where it becomes a dirty word is when actually you distract yourself, and whether it's out of desperation or out of overkeenness, you end up going into lots of things that aren't interrelated. And as you know, resources are finite, right? You know, and in an organization. And when we look at it, I'm sure you do, it's always about, well, great, you know, we're going to do some things that are good, that drive thought leadership, but ultimately as well, you know, we survive and we pay our people, and you know, we drive forward the organization with what we bring in as well. So we're always relating it back to that, and ensuring that we use our human capital in the most optimum fashion.
Yeah, I think that's absolutely right. It's you know, this whole time for me has been about making sure everything is maximized, and that includes every single individual. So, you know, as we, you know, whether it be the V shape, which I think is becoming increasingly, you know, likely as an economic return, then you know, it's there to be capitalized on, and I think that's a really interesting sort of segue into what's happening. Look, we are I'm always sort of very conscious about empathy during this sort of situation, but I've sort of positioned this to look at the positives and the optimistic side of the markets. Your business is you know, sort of centered around the capital markets, digital markets, and that sort of area, which have probably been two of the best areas to possibly be in during this crisis. Maybe not so much in 2008, but right now it's been a really sort of robust area. Tell us a little bit about your view on that, and what it looks like in that space at the moment.
Yeah, absolutely. I mean, you know, even ahead of this, if we look at digital assets, and you know, everyone sees digital assets as cryptocurrencies, and you know, there's negative and positive views on those, but actually, you know, you've got the unregulated markets on the one hand, you know, that have had traction on cryptocurrency derivatives, and you've had the regulated markets, which, you know, I've been in now for over 2 decades, where really the model hasn't changed. You know, you've had competition, and you know, as part of that with Chi-X Europe when we did that, and there's been other ventures. You know, ICE came to the fore when CME was kind of all conquering as well. But actually the model's pretty much been, since the 1990s, kind of electronic, more or less vertically siloed. You know, blockchain and digital enablement, yeah, it's been an overhyped term, you know, over the last number of years. And you saw, you know, when the crypto bubble burst, you know, with the ICOs and everything like that a couple of years ago, again, there was a flight to quality, but actually the sector came out much stronger for it. And even now, as we saw, that hype cycle, whether it was security token offerings and things like that, was on the up again. And now there's been a bit of recalibration, but actually it's good because good projects are coming to the fore. So actually, you know, when we look at this space, it's incredibly exciting because, you know, you've got the large banks and other houses out there, you know, in the public domain saying they're undertaking projects, you know, the likes of Fidelity and a number of the banks, you know, out there that are into this. You know, there's something in the news about Goldman's the other day, and they're not the only ones, JP Morgan, for example. So all the big names are looking at this, and actually it's interesting because they're not just looking at it from the perspective of traditional assets and digitizing them. They're actually looking at it from the perspective of cryptocurrencies and Bitcoin as well, right? Because you know, these are an asset class in their own right, and actually there is mainstream demand. And the big thing about regulated markets is that trust factor. So, you know, which doesn't exist in those unregulated ones. So with that in mind, there's a number of hot areas that we've seen. Yes, you know, there are some proponents out there in market infrastructure that don't properly understand this space because they jump on the bandwagon, and they're citing that actually the pandemic is going to kill demand for these. But actually we're seeing the opposite. Actually, we're seeing more demand because it means less intermediaries. You know, whether you're on a private permission blockchain or a public blockchain, or you use a combination of the two, it means an easier way of doing things that is more immutable and more transparent. But you know, you can harness technology now to do what you were doing that was more manual and labor intensive. So and that said, you're also seeing opportunity to reduce the number of intermediaries, but intermediaries can be good, right? And they can be bad if they don't add any value. So I'm not saying they should go away, but because, you know, decentralization in its own right doesn't work either for liquidity. But we're seeing massive opportunities there on the digital exchange side. We're seeing huge opportunities on the digital custody side. We're actually seeing massive opportunity on digitalization of payments. So not and this is, in some ways, it's an interesting one for the banks, because they make a lot of money out of moving money, you know, and that whole transaction stream with that. You know, when you can tokenize now fiat currencies, and hold them in custody and match those off against asset movements, it reduces that revenue stream. But then the banks themselves are investing into fintechs, and a number of them, including ING, have set up venture funds as well. So there's massive amounts of money pouring into this space, but now it's actually real live projects. You still see a lot of hype out there. I mean, it's funny, I laugh because you got big organizations that we're very familiar with, right? That some of them are actually doing tangible projects. Others, because their competitors are announce projects, but actually behind that, the cupboard is bare. But actually the market, those that are consuming these products, whether wholesale and retail, are getting more savvy about it. So there will be, I mean, that will all come to the fore. And it's good in some ways because vaporware, as you know, I mean, if it doesn't exist, I mean, it only goes so far in terms of marketing and hype cycle.
Yeah. It's been the hype cycle is fascinating, isn't it? Because I look back over the last probably 4 or 5 years of a real roller coaster of hype at various different stages, and usually there's quite a clear curve, isn't there, on this? But it keeps on getting more life blown into it, and every single time there's more people who are keen to, as you say, profitize the collapse of the digital world and or digital currency, and it's durable, isn't it? That's for sure.
Yeah, it is, and actually, what's really interesting here is, I mean, we've been familiar with B2B for some time, and then B2C's been out there, and obviously with decentralization and decentralized finance, or DeFi, C2C as well is an opportunity, albeit with its scale challenges as well. But actually, we're now seeing B2B and B2C converge because capital markets, increasingly are becoming more mature, and great. If you've got an illiquid bond or an illiquid stock, putting it onto a blockchain isn't the holy grail. In terms of being able to bring liquidity into it, you've really got to look at business model and what other aspects that brings and some of the other efficiencies with that, right? Because there's no magic wand here. But that said, if we look at now, Goldman Sachs, if you look at, they've launched a bank in the UK called Marcus, which is interesting. That ties in with services that they have. And you look at increasingly now, Google with the Gates Foundation announced something, again, on the same code base as Ripple, and a similar platform there that's more open source, but they're going to make that available for financial inclusion. And so that platforms dealing with payments and other means, given the likes of M-Pesa in Kenya, are closed platforms. And as you know, we do a lot in emerging markets in Africa at the moment. But they're looking at how that's made available so that you've got a common standard. So Google see their growth on the one hand as the next billion people in Africa or other emerging markets. You've got the wholesale markets on the other hand going, well, actually, how do we get closer to that retail flow and those individuals? And you're going to see that increasingly converge. So it's no coincidence that I think there were rumors out in the press about a couple of months ago that Jeff Sprecher with Intercontinental Exchange was looking at buying eBay. I thought that was brilliant, for these reasons. And you've looked at Goldman partnering with Amazon. You're going to see an increasing amount of these plays actually, and you'll see with what you're doing as well. On the recruitment side, it's going to spawn some interesting opportunity.
Oh, for definite, and we're seeing some of that sort of thing already coming through. And I think it's been a really, you mentioned Goldman's there, you talk about IMG. I think Citi have been a sort of a fantastic proponent of a business there, a bank who a traditional organisation that have really embraced the financial arena as well.
Yeah.
And I think that's been a real. I think it's probably been a real feature of the last couple of years where, rather than this sort of disruption and challenge, it's been an embracing of and collaboration between those sort of things. Commercially, of course, because from the investment banking perspective, but I think that's absolutely going to be a trend we continue to build out, and probably a key strategy for any major bank looking to navigate the next few years, if I'm not mistaken.
Yeah, if you look, I mean, larger organizations, it's much harder to be agile, and I call them the oil tanker, but they're robust, they're solid, they're fit for purpose. So a lot of these organizations that you mentioned, Citi and others included, I mean, they're looking at innovation within, but also innovation from the outside in, rather than innovation just from the inside out. And I think, you know, those two models increasingly working together so that 1 + 1 makes 11. You know, and maths was never really my strong point, but you know, it's all going to be about that kind of network effect of those models coming together. Because if you look at the banks, you look at the existing exchanges, they've got really, really strong franchises and a strong client base, but they're all asking, well, what next, right? You know, we've got this strong franchise, but actually, in essence, they're all doing the same thing. And that, you know, unique selling point becomes increasingly difficult. And you know, when you've got a new area like digital assets, increasingly that spawns a new way of thinking and other thought processes, which allows them to see what their competitive advantage will be. So yeah, of course, you know, you've had the downturn, which has impacted some of the neobanks and others, but actually, and with some management changes, but actually we see it as broadly positive as well, because some of those neobanks, the customer acquisition costs were quite high, but actually the neobank model, whether it's wholesale or retail, has massive opportunity, because the bank and the traditional banks realize that, because their cost bases and their cost to income ratios are high relative to these digital banks, obviously because they're using technology to keep those costs lower. So increasingly, you know, some of those existing banks are either investing into these types of ventures or spawning them from within and spinning them out. And actually that's a good thing, because it's going to spawn additional levels of opportunity. You know, it's better to sometimes disrupt yourself and cannibalize your own business in a standalone venture than someone else cannibalize you. You know, that old adage of Netflix versus Blockbuster. And I think that's what we're seeing now. There's a realization, you know, for everyone from the card companies to the banks and others, that there is going to be change. And yes, of course, they're trying to hold out and maintain revenue, but if they don't change, you know, again, the river's going to meander away from them elsewhere.
I saw an advert today for, you know, there's still the one original Blockbuster that's still out there in America at the moment.
Yeah, that's right.
And they've got a big hoarding out there which says, Netflix, you may have your algorithm, but we've got our caller rhythm, which is basically call us up and we'll match you with the perfect film. And I just thought that said everything you need to know about the pace of change with it. But put the two of them together, I still think you've got a human element that can outperform.
Yeah, exactly.
There's a really interesting piece about, you know, you've spoken about Africa there before. We've got, you know, huge development from east to west that's going on throughout the markets at the moment. Tell us a little bit about your view there, because I know you've got a sort of a lot of views on a geopolitical basis as well.
Yeah, it's interesting. I mean, we've got clients all over the world now, you know, just like you have, and we're fortunate, you know, you get a good insight into this with various projects that you're doing, you know, some of which are at government level and others more commercial level. And so when we look at it now, obviously with the pandemic and even ahead of that, there was always this kind of interesting relationship with the US and China and you know, that whole idea about
interesting is a very polite way to put it.
No, that's right. I mean, I guess politically correct, you know, sort of but that whole, you know, that whole strategy around, well, economic supremacy, right? And of course the US has been a tech hub for a number of years, and you know what happened in Silicon Valley was great, and that spawned hubs all over America as well, you know, from Seattle to New York and elsewhere. That said, you know, technologically, China has been kind of moving on leaps and bounds as well, and obviously there's a Belt and Road initiative that they have to then propagate that out along key strategic paths. So you're kind of seeing the West and the East at the moment, and you know, difficult relationship between the two. But actually, that's spawning opportunities, because if you look at digital assets, especially crypto markets, you've got a large appetite and you've got a large amount of flow that originates from Asia, right? And here, and you know, we're not, you know, everyone cites, well, crypto, you know your customer, anti-money laundering. What about that? But actually, we know, much like the banks are looking at this, equivalence around that isn't an issue, but it's more about, you know, where do you put your capital, where do you hold your assets, and how do you trade between these different nodes, which blockchain makes increasingly possible. And then you combine that with artificial intelligence, which is going to happen now. It's starting to happen, but already accelerate over the next number of years. You know, it becomes a data and analytics play into kind of smarter decision making. But at the moment, you've got that pocket of Asian activity, and that's propagating out. you've got the US kind of venture side and other projects, large US firms like Facebook, Google, and others as well that have spawned out kind of all over the world, Microsoft included. But increasingly now it's about, from a trading perspective, clients say, well, actually, I want access to institutional liquidity in the US or in the UK or in the EU, but actually I don't want to be there, right? And then equally, if you look at some of these firms that are based in the West, they're kind of saying, well, how do we access that kind of crypto and other liquidity out in Asia? And that's where some of these offshore centers are now, they've got huge potential. We're in the Seychelles now, and we've got a whole raft of exchange licenses and a fund there, to do digital and traditional with both of those things. And we're seeing that as a gateway between the two. And really, offshore, if done in the right way, because offshore gets a bad name many a time about tax evasion and things like that, but it's really not about that. It's about efficiently matching off and acting as a gateway between different forms of activity and liquidity. So we're increasingly going to see that as well. And there's a big fight of competitiveness amongst the offshore centers to see who reigns supreme. It kind of reminds me of over 2 decades ago, Singapore was very much in the shadows of Malaysia, and everyone thought Malaysia would be the big boy, but they made lots of good policy decisions, and they ended up where they are now. And in Africa, you've got Mauritius as a big brother as far as offshore centers go, but actually Seychelles is making all the right moves. And actually, my prediction is in 5 years, it'll leapfrog, within 5 years, if not seen, a leapfrog Mauritius and other centers. So with that in mind, this kind of geopolitics is creating opportunities for those that can bridge that inefficiency gap, which leads to revenue opportunity as well. Yeah,
efficiency, again, one of those sort of key themes of financial technology and financial markets over the last few years. I think it's fascinating what you say there. Let's focus on GMEX and you guys. It's as I said before, it's been a sort of another fascinating story that you've been involved in, and one that's continued to get traction and recognition and growth and such like. What's next for you guys?
Yeah, it's interesting now. I mean, increasingly we're now moving into some interesting areas where actually, the technology enablement and development is great, and we see, increasingly traditional exchanges coming to us asking how they go digital. And as with what a lot of thought leadership and other areas that you're undertaking, you've got a core business on the recruitment side, but there are a number of other facets to that now. And if we look at what we're doing, technology is great, but actually, if you don't know about the regulation, the market structure, the legal and compliance elements, the business aspects to harness liquidity around it, again, a platform without liquidity is just a platform. It doesn't matter how good the technology is. You could have the best technological exchange in the world, but without liquidity, it's meaningless. So increasingly now, we're combining those concentric circles, with what we have on the technology side, with what we can offer, with some of our own ventures, like the exchange setup, the custody we have as a service, with one of the ventures that I'm JV'd with personally, Digital Partners Network, where we've got legal, accounting, corporate structuring, the fund, everything under that as well. And when you marry all that up, you can offer a multitude of services that are way beyond technology. And I think increasingly organizations are going to be looking at digital transformation, but they don't really know. They know that they have to do something. They've got some level of idea, but they need more advice, and they need a greater level of handholding through that. And actually, they're finding that when they go to larger strategy firms, they're not really getting that, because they're kind of teaching them how to suck eggs. Some of them, I'm saying some of them do a good job. So actually, this is where we see big opportunity for us, and we're already getting traction with that. And also, the other area is, we mentioned that exchanges are very much standalone. Now, that's great, you can enable them, but we've also come up with a transaction level technology platform that connects those different exchanges and custodians and allows transaction flow between them, which kind of acts as a glue that holds things together. So I think, increasingly, we're seeing an opportunity in those areas, and that's kind of moving away from just purely technology as a service, which is our bread and butter, or technology as a license to these ancillary revenue streams as well.
Yeah, I think it's just I think it's typified of what I've known about you and the business for a long time, is that sort of ability to to capitalize, to see opportunity, and to provide proper solutions for it. So it's great to hear that sort of stuff continues, and I've loved watching the business grow over the last few years, and congratulations for another fantastic job so far. Lots more to come though, by the sounds of it as well.
Yeah, no, likewise to you as well. Over a decade, we've seen a lot of change and a lot of adventure, as you say. And it's a bane of every entrepreneur. There's always that roller coaster, as you've known over 10 years, right? And but when you look back, that coffee we had back then a decade ago, it seems like yesterday, right?
I know. Well, you haven't changed a bit. I'm looking at
no, I mean, you have as well, even though you think you have. But so much has been achieved in that time. But actually, it just seems like yesterday. And I think with that in mind, what's important, and I think it's quite clear from what you do, this isn't a job. It's kind of a hobby. It's a passion as well, right? And it's adventurous. It's very exciting. And I think when we're both fortunate, we're in something we really enjoy, and when you have that and you can capitalize on that, it makes our job a lot easier in many ways. So I think here's to the next decade. Hopefully we'll be having this conversation a decade from now, and we'll see where we are. The possibilities are endless.
Well, plenty more in between, I'm sure. Plenty more in between.
More grey hairs for sure.
You keep saying that. I think you're just showing off. There's none there that I can see in there. Maybe it's just a shadow.
No, that's right. I don't diet, and I want that Peter Pan moment, but but again, death and taxes are unavoidable eventually, right?
The ageless Hirander Misra. I love it. Listen, I'm sure there's going to be people watching this who've been fascinated with what you've been saying. How best for them to get in touch with you?
No, it's great. I mean, we've got all the contact details on the GMEX website as well, and then I'm regularly on LinkedIn now as well, so it's very easy to.
I've seen that increasing.
Yeah, to get in touch that way as well. It's interesting. Even though we've been busier than ever during the lockdown, obviously you're not commuting. Other things, you sit down and it allows you to think about things more broadly. And so I've ended up getting this passion for writing, which I did have, and then you get very, very busy, and then it's kind of led to some interesting articles over the last few months. Whether it's on FinExtra or Medium or other places as well. So I think when you sit down and write, it encourages you to think as well. A lot more.
Yeah, definitely. Well, I think this is these sort of times are the sort of mother of invention. So if that's happening for across the markets, then God knows what's going to be happening with you. So I look forward to seeing the stream of innovative ideas that follow in recent weeks. Hirander, it's been lovely speaking to you. Thanks so much for joining us, and thank you all for watching. We'll see you soon in another episode of Fintech Focus TV. Thanks a lot, Hirander.
Thank you.